you guys see my screen? Hello, everyone.
We can. Good morning, Coach.
Hey, hi, Stel.
Hey, man.
Good morning, everybody.
Before you start, I just want to say once again, great job. I mean, you were fantastic on the summit. I think everybody was, and I really, really enjoyed it. Well done, Dale.
Thanks so much, Stel. I have a little summit hangover this morning from, NG saying, an amazing 3 days. And I hope everyone got that one big idea or a subtle idea that really helps them make a change for the better. And I think there were, I know I did. I mean, I learned some things from all of our guests. So I think there's, there was something out there for everyone that they needed to hear this weekend. So, uh, I think that we're providing a great service for the community. And you know what, for our guests, they got nice visibility, and our sponsors. And I didn't know if we could do a better event than the first one. And we did. Now, January, we better start getting ready for January already.
And just to clarify, people are asking, people who have registered to trade the summit. Even if you register now, you will get an email in a couple of days, probably Wednesday or Thursday, with links to the recordings.
So all right, look at there. There's a testimonial right there in chat, Stel, from NG.
Yep.
I mean, that's really that made it worth it, NG. Okay, so let's get to the markets. See what's going on this week. I thought it might be a little quiet today because it's Yom Kippur. It's the highest holy day for people of the Jewish faith. But, this was something that we talked about last week. And, I'm not saying it can't go lower, but this is what I was looking for. So I'm no longer, interested in the short side. I don't know if it's time to reverse yet either, but I do think that Stel's going to get his sell again up there, and this is the reason why. When you look at the weekly, it's a daily. This kind of looks like, an ABC, because this was, as Steve would say, or Greg, I don't know what their stance is on this, but this was pretty directional. Maybe it was impulsive. And so far, this looks like, a corrective market. So I wouldn't want to see it much weaker than closing under this 90-30 level. But I think the way to probably time it, and this was looking pretty doubtful last week, but not as much so as I want to sell cable up at about 131, 132, and just hung on by a thread. But now it looks like it has at least 130 in it. So I think the buy in EG should be commensurate with a potential sale in cable, which I think is between 131 and 132. So, nothing to do with EG. I'm going to time an EG buy once cable's up here at some type of fib retracement, halfway is 31, 61/8 32, because I do not think that the dollar rally is over. I think a lot of people do. And I think that when the dollar turns up again, that cable could be one of the weaker ones. It'll be weaker, I think, than euros. So that's my view in currencies. It's not a big pullback in yen. Yen had a good week last week. I don't know. I'm a little conflicted after the 3-day event. Because Chris Weston, yes, Chris and his fundamentals argue for a much lower U.S. dollar yen. So his talk on fundamentals, it's really not my wheelhouse, but He knows them. So, you know, that gives me a little pause. And yet I saw Axel, who showed real long-term, clean, right out of the textbook type of formations. And, you know, there's really nothing to do in the end based on Axel's chart. When you go back and look at it, it's a big triangle between 100 and 110. And he has this like developing a right shoulder here. So I'm going to give the yen the benefit of the doubt still to the long side, because this was a pretty good week. And let's see how it holds up during dollar weakness. I still think there's more upside in this. Nice pop in S&Ps. Thought maybe we could try 3,400. You know, this may have been enough. You know, I remember talking about 3,200 being a very important area. And then late in the week, you know, we didn't have a divergence here, which is why I said I think we could have one more low, because this is my edge. If I was a guest on a, you know, a summit, the RSI is my edge. So when we were here and I saw this on multiple time frames, it told me there was at least another low coming. The low came and it held the 3,200 level, and we're getting a nice bounce off this 3,200 level. Also, Peter Goldstein, who was on talking about a break to 3,250 to 3,200, and then he's looking for new highs. So, you know, you can't rule that out either. 3,440. Okay, I don't know what the news was overnight. So I think that's about mainly what I wanted to talk about as a burned out guy. Gold trying to pop here. I'm not sure this is enough for a bottom, but I don't know why we can't, you know, while the dollar's weakening, get some type of rally to sell into. I still think we're going to see a trade under the 1800 level, but it could try 19 again. Okay, Arena, we got China's had some good economic numbers, or were they pump priming some more? Anyway, that's my view. Also, you know, I've been, see, here's another example of the summit serving me. You know, I really respect Tracy, Shy Girl, and she was bullish crude and still bullish a dollar, which means that crude, you know, is going to start acting a little bit more like gold if she's right, that even a strong dollar isn't going to depress it if she's right. And this gives me pause. Plus, last week I tried it, and when the S&Ps were cratering, there was no response to the downside when we had risk off in crude. So I'm not going to fight it right here. So I've gone from bearish to neutral. I'm not bullish yet, but if I wanted to make a case for another high, I certainly have it with these readings up here before we corrected. You know, that was a pretty good reading up around 80, and you have it up here too. So we'll see. Let's just look at the 4-hour. Yeah, you know, market's on top on this. Maybe if we get through 41, we should have maybe 43 coming up this week. So that's it. That's all I have. I hope everyone had a great time. I know I've said it 20 times. I had a great time at the summit, and interviewing Jack was really pretty cool, and his stories. And you guys should pick up Jack's book, The Unknown Wizards, Traders Who You Don't Know, because it's so hopeful. It's not, you know, guys that, you know, have been rich for a long time, and it shows everyone the struggles they went through, you know, running their account to 500 and then blowing it out and having to do it again and blow it out. And you know what my takeaway from that is, from that guy? Jack said the guy never trades without a hard stop. So that was his lesson. And, I know I've traded with mental stops and cancel if closed because I still want to be stubborn, but that was a great lesson. And the bellhop who, didn't run his account to 1 million because he withdrew his profits to live on or buy a house or anyway, it should give all of us hope that we can do it too. Okay. So, and one thing else Jack said is they were all hard workers. They didn't just, put in a couple hours a week or a day to get there. So, I think sometimes the harder you work, the better you get. And with that being said, who thinks Blake? I think the best interview for the summit, my vote goes to Blake's job with Danielle DiMartino Booth.
Well, that had nothing to do with me. That
well,
was
you
all
did a great.
Danielle.
I couldn't have done any better. I mean, I think that was the best interview, don't you?
Well, I don't know.
I agree. I agree.
Huh?
Well, thank you. I was doing it, but I didn't know how well it was going. I was just enjoying the conversation.
It was great, man.
She's a firecracker. She is something.
Oh
else.
my God. I hope her husband has a lot of energy.
Oh my gosh, can you imagine? I mean, she's like she's just bottled up like yeah, I mean
I enjoyed it.
I can take I love her, and it was like that was a really, it was really fun to interview her. But man, I would yeah.
And now we know there really is a PPT. That was a great question.
That is
that was a great question. Yeah, so us bears really do have someone to blame when they take our profits away.
I was going to tweet her a picture of like a tinfoil hat gift.
Oh yeah,
and see if she and
Lynn Alden, I think Stell's in. She was great. I mean, you know what, guys? I'm going to watch these all over again. There was so much good stuff, and it was fun too. It was compelling and fun. It was great.
Yeah, it was really a great event. You did a great job, Dale. I just being there, the full 3 days, and just interacting with everybody. I had a lot of fun with Jack yesterday, listening to Jack. I mean, it was Jack Schwager. I think
it's just a normal, normal,
painted,
good guy.
Yeah.
Oh yeah,
it's like an Elvis sighting for Stelios.
Yeah, he was blushing a little bit, but yeah,
he does seem like a great, just a great guy. It was a great event just overall. I mean, I keep thinking yesterday, and I was thinking this yesterday evening. I'm like, man, that lady from Midland Trust, and I don't think about trading currencies in tax deferred vehicles, but I forgot that you could. And I'm like, how many people out there didn't know that you could? I mean, she's from Midland Trust, and they're basically oh geez, what's the
trusted? They're a trustee forever.
They're
fiduciary
for those retirement accounts if you really want to trade currencies. And obviously I would never recommend anybody even think about it unless you're very skilled in trading currencies, because you have to really understand leverage. To trade in your retirement account, you basically, I would trade without leverage, just trying to take advantage of a dollar move or whatever. But I think it's great for those people that understand how to trade currencies, and they know that they could do it. I don't think there's I don't think that's common knowledge actually here in the US. So anyway, I mean, there's so many great pieces of information throughout the whole couple days. I have to go back and listen to Chris Weston because I missed half of his event because it was so early on Sunday morning for me. And we actually have people in the chat room who are like, hey, I'm in Australia. When's the recordings going to be available? Just so you guys know, the recordings are going to be available at the end of, or, Tuesday, Wednesday-ish.
At the end of the year. Ha, ha, ha.
Yeah, right. And maybe at the end of the month.
Yeah. Oh, there you go.
Yeah, which will be on Wednesday. Anyway, great job. And I don't want to sit here and pat our backs the whole time. We got things to do. It's Monday morning.
Okay, buddy.
Yeah, but really great job. And I hope everybody that was at the event enjoyed the event. And remember, like Dale said, if you didn't register and you're like, oh crap, I forgot, and I wasn't around this weekend, go register right now so you can get the recordings. So
cool.
Blake, can I just say one thing before you continue? Because we have a question.
No one needs to stroke your own ego.
Bye. Our friend, hold on, who's calling? Our friend Rakesh is asking, how do you get the offer with Pepperstone if you already subscribed to ForexAnalytix? You can get it. You click on the ForexAnalytix sponsored link at the bottom. You can see it there on the page. And you have to use the link that we have there, the button. You will still get 2 plus 2 months, depending on if you open a funding account or if you trade 5 lots or whatever it is. So you can still get it, but you have to use this button, open account. And once we get confirmation from Pepperstone that you have done that, then we'll add on however many months it is based on your activity. Okay.
Yeah, there
Thank
you go.
you.
And I just
2 months for funding an account and another 2 months for doing 5 lots.
There you go. And thanks, Steve, for the clarification. And make sure you use this link because we actually have to connect the accounts together between Pepperstone and ForexAnalytix. By the way, I just put in the Trader Summit link for those of you that haven't registered. Because you're like, oh crap, I forgot. Just make sure you go register so you can get the recordings at least. And all right, guys, we really got to get started. Good morning, Steve. By the way, great job.
Good morning, guys.
Good morning, Steve.
Steve's. If anybody's tired, it's got to be Steve. Hold on. By the way, if anybody is in the ForexAnalytix chat room, just letting you know, I'm scalped out of the cable for 12 pips. I'm out. Hold on. Sorry, I was short earlier. The cable above 129, and I just scalped out of it. I told everybody it was just a scalp. So just in and out. Now let's talk about. And by the way, if you guys don't know where the ForexAnalytix chat room is, here. Dang it. I did not want that to happen. Hold on. So irritating when that happens. Give me a second. It just made all my screens go away. All my Bloomberg just minimized. It's such a pain in the butt when I do that. There's someone with all these screens that I have. If I pull away. Okay, hold on. Okay, there we go. So when I pull something across my multiple monitors like that, it just did it again. Oh my God, I'm gonna kill somebody. I have to relaunch everything. It's such a pain in the butt. You know what's funny is you guys can sit here and watch me try to dance. It's hilarious. I'm sure you guys are all laughing, going, "Oh, look at Blake flounder." Okay, anyway, there's the chat. There's the chat room. ForexAnalytix chat room is what I was trying to tell you. If you guys don't know how to get there, this is just us chatting. All morning long. If you guys, as I was explaining to you guys yesterday, that is probably. It's the heartbeat of really ForexAnalytix is just our chat room. So that's where I'm at, and other, the rest of us too, the team throughout the course of the day. So you only catch part of us here, but most of us, most of the day, you're going to see us in the chat rooms. Anyway, let's go into the charts because we got to really talk about what's happening this morning. And one thing I guess I got to point out is we are coming into the end of the month. So end of the month, end of the quarter. There's, from what I'm reading, estimate wise, there's supposed to be a lot of dollar buying coming in at the end of this month. So just keep that in mind as we go into Wednesday. Wednesday I think is the last day of the month. Wednesday, yep. So we're gonna probably see some dollar buying coming in over the next couple of days. Just so you're not out there trying to be too aggressive. Like if you're a euro bull and you're like, oh look, we're holding a 50% retracement, I'm going to get long the euro here. I'd be a little careful. I'm myself, as long as we are below 117, I'd rather be on the short side of the euro. So since I'm on the chart, let's go ahead and write that down. 117, and most of you guys know that I am targeting at this point. I'm targeting 116, or excuse me, 115 with the euro, which will be down here, this breakout point. Hold on, what? Okay.
I think I'll be back in a minute.
Yeah, sure thing, no problem. So this support here, previous resistance, should act as support. Doesn't mean we're going to get there today. I think the 50% retracement is going to offer support today, which will come in at 116. But as long as we hold below 117, got to remain bearish as far as I'm concerned. Cable had a nice little squeeze. I figured I was going to get out of that a little early, but trying to manage trades while scalps while I'm sitting here with you guys is not always the easiest. Remember that the cable is holding around its 50-day moving average, and that's important for now. And we spent 3 days around that 50-day moving average, and we finally bounced. One of the big moves that you probably have seen is, or maybe you haven't, is the euro pound actually went to the 618 retracement. However, if you didn't know that the euro pound was at the 618, the euro pound analysis from an hour ago, the euro pound 4-hour chart shows a dip to the 618 retracement at the 90.24 level, which should offer support with the RSI oversold. That was when we were at 90.38. So we're at 90.52 and been as high as 90.60. So hopefully if you are reading this analysis, you're like, okay, I don't want to be on the short side of the euro, or short side of the euro pound there. And that's one of the things I think that's helped the euro off of the lows today, is supporting the euro as the cable's coming off, or was coming off, is the euro's, euro's not falling over because we have the euro pound bouncing. So you're going to see some cross analysis and flow come through the market, I'm sure. So here's the cable. Let's talk about where we're at and maybe how far we can go here. So if you take that previous high, and let me go over to an hourly chart here. Previous high to lows, the 78% retracement comes in at 129.30. Also previous support right there comes in at 129.10. So you know that this is all going to offer some pretty good resistance. So if we make our way up to 29.30, should probably use that as an area to probably be on the short side. Support today dips back to 127.90, should offer support, which 128. So we can write down that, but I'm going to write down 127.90 should offer support. Since we couldn't break below the 200-day moving average, I'm just going to put it in range right now. We really have to get below that 200-day moving average in order for the cable to be bearish. Right, it's been holding up. I still think overall it's bearish, but it's hard to get like aggressively bearish at this moment. Aussie. So now the Aussie, we are outside of the channel. We are barely holding on to this breakout point, and I'm gonna write it down again. 0.7030 is major support for the Aussie right now. Major. I'm not sure. I'm not sure if we're going to be able to get over this this resistance here, hourly wise. And if we make it to 71 cents, I'd be pretty impressed. But I'm going to write down 70.85 today. I do think it's bearish. Okay. Let's go over to the Kiwi. Kiwi also is below the, now remember we have a double top here. So we just need to break below 65 cents in order to put 64 cents in play and the 200-day moving average in play. Resistance is at 66 cents. You guys should all know that, but nothing's changed here. Bearish. Okay. Canadian. So the dollar Canadian bounced off wedge support, and by the way, the dollar Canadian, as you guys know, we're in a long-term inverted head and shoulder pattern. The 134 level is the 24% retracement. I'm gonna say that, you know, when you're talking moves, like big moves in the market, very rarely does a 24% retracement ever hold. Very rarely. It provides a stopping point or a speed bump, if you will, to get to the 38% retracement. So you can see specifically the last week, we stalled here at this 24% retracement, and we just kind of been bouncing around, consolidating before we make our next leg higher towards the 38% retracement, which comes in at 136.40. So I'm very aware that we're at the 24% retracement, but I'm also, you know, still playing this inverted head and shoulder pattern. And now we're just wedging into, hold on really quick.
It's holding up pretty good, Blake, with a weak dollar today.
It is. And hey, look at crude oil. I mean, crude oil is above $40, and you know, the dollar.
Shy girl.
Yeah. She was great, by the way. And talking about crude, and she was right. It's the most unloved asset class right now. But I'm going to tell you something about crude. I don't get too terribly bearish crude, like longer term. Like you know, you could be bearish crude, you know, for the next month or two. But I'm not. I don't get like. I'm not a crude's going to zero tomorrow kind of guy.
That's bullish.
Huh?
That's bullish. Because the Bears are saying
right.
minus 100.
No, but the reason why is, you know, the production levers that are being pulled behind the scenes. You know, by OPEC and other oil producers. It's like, you know, if oil price drops far enough because demand is weak enough, then producers just pull back on the levers on production. So, you know, it's like they'll just extract less for the most part. You know what I mean? So the going to negative that we went temporarily was a phenomenon. Sorry, it's Monday morning and we worked all weekend, so getting up early, so you're gonna get some yawns here and there. Anyway, I just the going to zero was a phenomenon because of storage capacity at the time. So anyway, I'm bearish on crude because it's going to eventually be not a commodity that's as important to us as it is today, but it's going to die a slow, long death. It's not, you know, it'll be past my generation, you know, so unfortunately, but, and just so you guys know, I live in Arizona, so I'm extremely sensitive to weather changes. Anyway, let's go back into the charts. Dollar Canadian still holding up. Bullish wedge is still holding up. The low today at 133.61 is support. I would say any dip down to 133.50 probably is going to offer support. 134.20 should offer resistance, but we're bullish, right? And we break above 134.20, that should open the door for the 200-day moving average, which comes in at 135. Dollar MEX, nice triangle consolidation happening in the dollar MEX. I would not get too bearish here. Not while we're above this broken trend line, not while we're above 22. So I would say 22.10, 22.45. It's bullish. Okay, dollar Swiss. Previous resistance acting as current support that comes in at 92. You guys remember, talked a lot about it, 92.40. We're struggling at 93 because that is the previous broken multi-year trend line. So you guys knew that 93 was going to stuff us, and it's also the 161% extension of this last move as well. So we're very well aware that 93 is going to be offering resistance. 92.40 is going to offer support. I want to say those are the same numbers we wrote down on Friday. So I don't want to turn bullish until we're back above 93, but I'm going to keep us in a range for now. Dollar yen, and I know I said the same thing on Friday. Dollar yen resistance is the 618, 105.81. You guys know that 105.80. It's also previous support here. You can see it right through here. 618 retracement. Support is down here at 105.10. I think this is pretty key resistance, by the way, because it's a 618. Plus, we have this downsloping trend line coming through right there. Okay, where am I at? Dollar index. By the way, guys, we go through this analysis process every day. For those of you that are new, we just, I've been doing the bias chart for years and years and years, and then I stopped. And Paul Franco did it on the European crossover. He does his own. And then I just reincorporated it over the last couple months. And, it's because I felt I was losing sight personally. And plus the markets were so challenging the last few months with low volatility that I'm like, man, we need to really be cognizant of all these, key levels that are around us. So, and I think it's helped myself, and hopefully it's helped you guys as well. 94 is support. 94.60 is resistance. And if you don't know why 94.60, 94.65 is resistance, it's previous support here. Pre-pandemic spike lows on the dollar index, that is holding us. But we're bullish while we're above 94, and we're getting to it. So 94, I think we should write 94.70. Resistance. US dollar, Norwegian krona. I was worried about this last week. I told you guys that we are hitting new highs at the 261% extension. Relative strength was divergent. Now we're pulling back. And as I explained to you guys on Friday, I was explaining to you guys, I think this is going to happen and we're going to consolidate a little bit here. We are. That's totally what's happening. It's just consolidating, around these levels. How far can we dip though? I mean, you look on a 4-hour basis, we have some spike highs and some consolidation here. So I think dips back towards 934 should offer support. It is bullish. 960 should offer good resistance. We're in a consolidation. Just you approach it with more of a bullish bias at this point. Gold has had a nice bump up higher. However, if you look at gold, you got to look at any move back up towards 1900 to be a sell opportunity. And we're getting a move right now, but the way I look at gold probably is the way it's probably going to move here is do something like this. If I had to guess, and I'm guessing right now, we spike, break through all those stops, and then we head right back down again. So I think while we're below 1900, you got to just it's bearish. And the reason why I say it's bearish is because we are below 1920, which is the previous all-time highs. And we're below this, the ascending trend line. And I think we're going to make our way down to 18 and a quarter, probably even into the 1700s again before we start bouncing. So support right now, and for today, is going to be 1850. Okay, S&P. The S&P's bounced a little bit further than I thought it was going to bounce thus far, but we are also nearing the 38% retracement that comes in right here at 33.55. Remember, this is all sorts of support back here too. So we're going to end up probably bouncing around once we get up here to the 32.55, 32.60. I'm going to keep us on range for right now, but you guys know that I'm eventually targeting the 200-day moving average. It comes in right here, and we have this AB equals CD that I think is going to be in play. It's just, today we're just kind of range bound. I think overall we're just drifting down towards the 200-day moving average ahead of the elections.
Maybe this, Blake, this first breakdown is kind of like an ABC for A, and now we're going to have some type of failing rally. I'm not sure where it's going to stop. Maybe your moving average, and then get one more break.
Yeah, I think we're going to make our way down there. It's just not going to be pretty. I mean, and we're the, if I have to imagine like thinking ahead, past the elections, I think it's going to be really messy as we kind of grind our way down here. I mean, what do we have good to look forward to? Not a lot. And we're gonna look at a contested election in a month and a half's time. Probably no fiscal support. The Fed's basically said that they're done. They're just begging for more fiscal support. We might get a small package, but it's not going to satisfy the market. So what do we really have to look forward to between now and the post-election? A civil war?
Yeah, that's pretty bullish.
Yeah, I mean, I live in the United States, and fortunately, I'm in the suburban areas. And I'm in a state that we can wield guns. So violence tends to not get so out of control where I'm at. It could probably get more out of control in certain other areas. I live in the Wild West, just so you guys know. We do. I mean, I can wear a sidearm in the most stores. You know what I mean? So things.
You need a pair of cowboy boots, buddy.
I got a great revolver with 357 magnums in them. I'll put a couple spurs on my feet and I'm fine. The Chinese cowboy. I'm just kidding. I am half Chinese.
We're a little punchy. Yeah.
I know it's Monday and whatever. So, but
happy Yom Kippur, Blake. I know you were bar mitzvah. So,
but the reason why I mentioned this, Dale, is because it doesn't matter both sides are so extreme right now that we're heading into an election where it's gonna be contested. If Biden wins, the other one side of the extremes are going to just go crazy. And if Trump wins, the other side's going to go crazy. I mean, and it's until the risks are heightened that there's going to be some sort of social unrest. So the reason why I mention this is because it's hard for me to come to the markets with a positive outlook backdrop until we get through all this. So I would imagine from an investor standpoint, you have to be a little bit more cautious. And so, yeah, I see the rally in equities right now, sure, but I think it's gonna be ugly. We're gonna be bouncing around, and we're gonna drift lower towards the 200-day moving average. That's just how I feel, especially as this megaphone pattern holds. You know, whether we break through the 200-day moving average or we break above the megaphone pattern in December, January, has more to do with post-election versus what's happening now. You know what I mean?
Yes.
But anyway, all right, I'm going to leave you guys with that. We got, Steve and Stelios, I'm sure. Oh, shoot. I have to
3,200.
Thank you. Yeah. 3210, matter of fact. I'll write down 3210.
Blake, the resistance is a typo on
what?
S&P. The resistance isn't that a typo?
The resistance what?
It's a typo, mate. It says 32.55, but we're already way above that.
Got it. Okay, sorry. Yes,
33.60 was it?
Yeah, 33.55, 33.60. You're right.
Yeah.
Okay. Half asleep. Hey, great job this weekend. I don't want to keep congratulating our team, but man, you guys did a great job. I'm gonna turn it over to you so you guys can answer some of these questions and analyze other parts of the market. So last thing, you guys know that this giveaway here, let me grab this. I'm gonna copy this link and I'm gonna put it in our chat box here. It's in the Zoom chat.
Is this the last day for the offer?
Yeah, we'll extend it through the weekend, right, guys? I mean, we'll extend it through. We'll probably extend it through the end of this week because we've been so busy we haven't focused on it at all. But and we'll tally up we'll select the winners of this this giveaway maybe Monday or Tuesday next week. Steve, Stelios.
Yep,
absolutely
sounds about right. Yeah.
Yeah, and so you guys to enter to win, you don't have to buy anything. Just retweet that tweet link that I put in there. Also respond to it. Say I'd like to be part of the giveaway. Or please, I want to win, or something like that. And then we're going to select at random one of you guys that have retweeted it, have responded to the tweet. So thank you very much. I just want to make sure I throw that out there. And remember, if you guys are already ForexAnalytix subscribers, we will actually add 3 months to your subscription, and then you still get a T-shirt, mug.
Oh, I want one of those Target T-shirts.
Yeah, I know. Me too. I want a Target T-shirt too. All right, guys. Hey, I'm going to pass it over to you. Thank you, everybody, for tuning in. Thanks for all your support this weekend. We really appreciate it. I thought it was a great event. So, all right.
Thank you, Blake.
Thank you, Blake.
Thanks, guys.
It was like Woodstock.
The
financial Woodstock.
The debate, the comments were coming fast and loose. It was fantastic.
Yeah.
Okay, so we're getting closer to the U.S. elections. A lot of talk from both sides. There was an interesting article in the New York Times about Trump and his taxes, or the fact that he hasn't paid any, allegedly. Anyway, it's going to heat up, and I think polls are going to be getting closer and closer going into the event. So volatility is going to be implied vol. Remember, who was it on the summit yesterday who talked about implied vol being high? Oh, it was Chris Weston, I think.
Yes,
going high into the elections and then staying high post-elections. So we're expecting contested election or trouble in general, which kind of makes sense.
It does.
This morning, it's been pretty quiet. The only big mover, apart from stocks probably going into month end, so a lot of buying happening. Not probably, we are going into month end. The only mover in terms of currencies, the main one is sterling again. And we go back to the usual Brexit headlines. Don't you love that, Steve?
Oh, absolutely. I was so looking forward to it, mate.
Excuse me. So yeah, we had Trade Minister Truss saying we're making significant progress actually on the trade deal with the US. But there have been a couple of softer Brexit headlines as well over the past 3 or 4 days from the European side. So that's helping the pound. Rates-wise, the Bank of England are a little bit of a mystery because you have Tenreiro saying that she sees, and I quote, encouraging evidence on negative rates. I'd love to see that evidence.
Yeah,
but,
I would love to see it as well, because other people have never managed to find them. So
yeah, so she's in favor. But there was another member, the name eludes me now, who said that there are no immediate plans for negative rates. So, you know, they're definitely considering it. They're discussing it. We know they've been talking to the regulator about how it can be implemented, etc. So it is on the table. Not yet. We wait and see. But you know, if you look at short sterling futures and the expectations, there is a chance of negative rates priced in. But we'll see how that goes. So the pound has been pretty strong. Coach has been all over that from Friday. Well done. Euro pound has dropped almost to where you said, but you know, really, really nicely done. And otherwise, risk on today, probably going to continue into month end until Wednesday,
very likely.
and we see.
Very likely, and you know, with all factors, you know, considered, I would still be very scared in being short stocks ahead of the election. You know, I'm pretty confident that I don't know if they're going to succeed, but I'm pretty confident that they're going to throw every tape bomb, news announcement, a lot of BS to the market, and we know that this market has been month in, month out, eager to buy all positive rumors, right?
Yes, absolutely. So, you know, you only have to look at the trade negotiations between US and China. We had buying on every rumor, then nothing happened, and we never go down.
And the fun part is that if you asked around, the vast majority of the people, investors, I mean, recognize that it's probably mostly BS, you know what I mean? And still they were like, yeah, but, you know, other people will be buying this. So, you know, I have to buy it as well. I mean, you know, I might as well buy it and make some money instead of trying to judge if it's actually going to make a difference or move the needle, because the market was not really, you know, trying to price in if it's going to make a difference or if it's an actual deal that, you know, will yield any positive economic results. So, you know, they kept buying it, and now I'm pretty sure we're going to start hearing about, you know, vaccines coming out like any day, and you know, whatever.
Our friend Richard is saying negative rates is not the British way of doing things. I love the Brits. My second home. Anyway,
negative rates was not the you know, the way to do things a few years ago globally, but now one by one the countries are just, you know, like I really view monetary policy more like a game of lemmings. I don't know who. You know,
I remember Lemmings. Yes.
Yeah.
Yes,
who of you know, have ever played Lemmings? I used to play it when I was really young, like I don't know, 10 years old or whatever. It's like little humanoids that follow one another, and you know, they just you know, unless you help them on time, they're gonna like fall on you know, from some cliff and die, or just you know, climb somewhere that's dangerous and get destroyed. So, you know, you have to on time to help them go where they're going. And bottom line, one you know, one is following the next without blindly, like without really checking what they're doing and where they're going. So, you know, more or less I view what central banks are doing a little bit like lemmings. One of them is moving forward and the other ones are just, you know, blindly following it, no matter what lies ahead.
I've been a lemming. In a past life.
Dale, Dale was possessed by the spirit of Neil Kaskari over the weekend.
Simon knows exactly what you're talking about. Oh no, I remember that. Okay, so before we start talking about Manic Miner and other games, let's go to the charts. I think we have about 10 minutes.
True.
We don't have a guest today because I wasn't sure I was going to come in on the Jewish holiday, but you guys, no time limit. Just let you know.
Okay, good.
All right.
So, Stelio, since we were talking about it, and since, you know, time is not going after us, You know, I'm afraid that this might have been the formation here. You know what I mean?
For what though? Do you think there's
S&P.
another
New highs?
Oh, new highs or what?
Could be.
I mean, yeah. I mean, this looks so far. This looks like a pennant to me, right?
Yeah.
I mean, is it necessarily one? No, but I don't like the way the markets reversed on Friday. And
Yeah.
even if we want to talk some pure technical analysis, right? Candlestick analysis in this case, which is like the oldest and purest form. So what's this here? Coach, what's this here? That I circled?
I'm not sure. I really
morning
don't
star
know all the.
formation.
It's a what? Morning star?
A morning star formation. Yes,
Okay.
this is a bullish reversal formation, quite a formidable one.
Yeah.
So
I know 32 was big. I had a horizontal line on that 32, so it held where it had to. That's
nice
for
morning
sure.
star. Nice morning star formation here. Nice breakout with, you know, very decent momentum so far from this trend line resistance. If you also draw this trend line, I mean, yeah, this really looks to me like a pennant. And not only that, I mean, let's zoom in purely to this price action that we had lower, right? Sometimes you need to go back to the basics. So, okay, let's take this color and this thickness and take this out. So let's see how we fell.
Yeah, ABC.
Not only that, I mean, does this look impulsive to you in any way so far?
No.
Doesn't look impulsive to me either. Listen, I'm striving here to remove my macro bias.
Your bias, yeah.
Yeah, because my bias, you all know my bias. Everybody that's been here for a long time, you know my bias.
Yeah.
This is an unimaginable bubble, right? The assets are in bubble territory long time ago. I mean, there will definitely be books written about this era in the not so distant future, in my opinion. But you know, at the end of the day, we're here to make money, not be right.
Yeah, not have our opinions validated. Only our trades.
Plus, you know something, you can do both. You can have your opinion validated after a period of time and still at least protect yourself from not having lost money.
Can I add something to that, Steve?
Absolutely.
I mean, with your analysis of the morning star, check out the high, and that's why I missed the top, and look at the RSI reading at the high.
Yeah, it was above 80 actually.
Confirmed. Yeah. It was a confirmed high. There was no divergence up there.
No, there was no. We had
any time frame.
We had up to this point, but then we blew through it. Yes.
Yeah, confirmed high, big reading, 85 near 90. Markets usually don't top on that.
Yeah. So listen, I know it's extremely difficult to go against your fundamental thesis. If there's somebody that knows this, that's me, because I always do a top-down analysis. But at the very least, I try to protect myself by not going against the market. I mean, I find it very tough to buy this market because it feels completely wrong. But at least I can avoid selling this market when we know that it's been in a bubble territory, and when the technical picture says that, listen, you know, this might actually be another bullish breakout, right?
Yeah, if the title was gold instead of SPX,
I would have bought it already
right now.
I would have bought it already.
Yeah.
Yes.
See? So, you know, if you really want to be objective about a chart, cover up the title.
That's actually a very good advice. Try to completely forget what that instrument is. Yeah, and just focus on the chart and say, okay, if I had no idea what this is, no idea, no fundamentals, this is not an index for stocks or whatever. I mean, and you had a look at this chart, and then you had the look at this pullback, and you know, you saw this breakout. Would you actually be sorting it here? I wouldn't. So, you know, that's my 50 cents here. Nasdaq, you know, third day of a reaction higher here in the Nasdaq.
50 cents.
if you want to be very strict about it, I would say 11,500 is like, the bull bear line, let's say, because break above that, the bearish thesis then weakens even further. But as I said, I'm very skeptical, especially ahead of the elections. Very, very skeptical. So, I'd rather trade other stuff, and, good thing there are other stuff to trade, right? Blake mentioned gold before, so I might as well, make a little mention in silver. Silver so far, might just be forming. Blake said that perhaps, what we're seeing in gold is a corrective rebound, and that might as well be the case. Although I have to be very, very clear, reverse what I said about the S&P and apply it to gold, meaning from a technical perspective, I do see the potential for both gold and silver to produce another lower low. Definitely it's there. I mean, the chart says that it's there. But I will not be shorting them in any way. In all actuality, I'm seriously considering buying some physical silver here. I know that there's a good chance I'm going to find myself out of the money for a period of time, but I'm absolutely okay with that. I'll buy more at 21, and I'll be willing to buy more at 19. So we might be at the beginning of developing some kind of a pennant, flag, or whatever. It's too early to say here in silver. But I think that probably the next low might be the last one. I don't know if it's going to bring us to 21, which is an interesting area of support, or it can bring us a little bit lower. But I'm actually going to be, scaling in this one. Now, we mentioned before crude oil. Crude oil really holding up quite nicely. I would still feel much, much better in buying crude oil if it produced one more low. I'm not willing to chase it higher from here. I'm really not. I'm not saying it can't work out. It might actually work out just fine. I'm just saying that I don't feel that this price is right for me. So I'm just not gonna do it. By the way, somebody mentioned, I remember at the end of last week, USD tier Y, and I explained why they shouldn't be buying the Turkish lira. Now you see why, because simply because some monetary policy intervention, unless structural problems get solved, or anyhow they become smaller, are not going to help Turkey with its currency, and I think it can actually become a lot worse. I actually think this might go parabolic once again. It used to trade like 12, 13 years ago, almost at parity with the dollar. That tells you everything you need to know. Now, let me go through some of your questions. Oh, somebody was asking about Euro Yen. Yeah. So Euro Yen, here it is. So Euro Yen, it's actually at the pivot area. You can see here why. We've pulled back. We broke through this rectangle that we developed here. It's a good question if we actually fulfilled the target. I haven't actually measured it, but we can do it now. Let's see.
Not quite.
Not quite. Not far away, but not quite. Yes. Yeah. Close, but no cigar. Anyhow, regardless, this is a horizontal support resistance area. We also tagged the 61.8% fib earlier on the day today. So, would I be selling it here? No, I wouldn't. But if we do see this rebound extend a little bit, I think selling a retest of that broken trend line might be quite a good idea. I mean, I think that might work. And even if it doesn't work, at least it offers a very, very satisfying risk reward. So I would be on board for that. I wouldn't be selling it at, as we speak, from where we are. Dale,
yes.
Tell me if there are any questions before I join the.
I remember I'm getting USD CNH
Yeah, that's a more recent one. I'll have no problem
Okay.
looking at it.
Oh, okay. Yeah, EJ was back there, and
Yeah, before that.
Okay, there really
USDC and
wasn't
H, by the way.
much. We were talking about the recording.
About USDC and H. Listen, I like how it overthrew this channel to the downside. You can see it here. And we've seen a decent rebound, but we're still confined within this descending channel. So I think the name of the game here is we're definitely bearish as long as we're trading below, let's say, 685, roughly. And the closer we are to 685, the better the risk reward to be short, because in any case, since the end of May, we've been in a downtrend. So, the medium term trend is lower. And that's still going to be the case as long as we trade below 685. Now, we break above 685, and we should be looking for, a bigger correction, at the very least, some type of a, of an ABC.
I scrolled back to the beginning. There were no other instrument requests.
Something like this, okay? But we need to break through the channel before we can talk about that. Do you see NOK recovery supported by risk on, or too soon in your view? Listen, risk on in most cases supports crude oil prices. Crude oil prices tend to support the Norwegian kroner. Besides that, risk on tends to favor carry trades, even the small ones. And we know that there is a small positive carry in being long the NOK against the US dollar. So bottom line, I still think that this rebound is likely to be corrective. I have to be very honest with you. I said it at the beginning of the year, and Dale will probably remember. Actually, not at the beginning of the year, at the beginning of the crisis. I said that, in my opinion, having to do with FX, there are two long-term opportunities that I'm really very, very happy about. I've already traded one, which is the NOK. I've been long the NOK against the US dollar and the euro from a lot higher from here, and I want to keep on building a position. The other one is, which I think is completely mispriced, is, and by the way, I was happy that Tracy mentioned that, Chigirl, is this one, USD Russian ruble. Huh. Yeah. I do think
that failing rally.
Yeah, I do think that it's completely mispriced. I don't remember who it was yesterday. I think it was Axel. He talked about the possibility, and from a technical perspective, there is nothing wrong with what he said. He talked about the possibility of this being
cup at the handle.
Yes, a cup and handle formation with 80, almost 83. Being
he was actually excellent.
Yeah,
it reminded me of like my old
Axel is a very good technician.
Yeah, classical type.
Yes.
Really classic.
The only thing I have to say here is the following. I hope he's right. You can't imagine how much I would love to buy Russian rubles a lot higher, a lot lower, but a lot higher if we're talking about USD ruble.
Yeah.
You can't imagine. First of all, there is an amazing positive carry. Second of all, this is not a political comment about the US or Russia. It's simple economics. Russia has a debt to GDP of about 20%. 20.
That's very good.
It is unbelievable, actually. And the US has surpassed 125%, but it's not the debt to GDP. It's the deficit trajectory, which is unbelievable. When I see the fiscal situation in the US, the only analogy I can think of is the Challenger space shuttle.
Oh.
Nothing else that comes to my mind.
I thought you were going to say something like Argentina or Brazil, some of the banana, countries that defaulted on their debt and had
the US has already defaulted once in 1971. In essence, that was practically a default, right?
The Bretton Woods, yeah.
The removal of the Bretton Woods treaty, right. Yes. Okay. Because in essence, when you say that my money is worth gold, and one day you say, no, it's not worth gold anymore, in essence, all the countries that were holding it as gold are now just holding paper in their hands. So that's a type of bankruptcy. Now, will it go bankrupt? Will it default? No, it won't. It won't. Because all its debt is denominated in dollars. So the US will never default in the actual sense, ever. But, yes, everybody's going to end up getting their dollars back. The question is, how much are they going to be worth it at one day? Yeah. That's the only question to ask here. My belief is that in a few years' time they're going to be worth a lot less. So I would personally not be holding any US denominated debt. As simple as that.
How about some of mine?
that's dollar denominated as well.
I mean, thought I'd take a shot.
It was worth it. You never know.
Yeah, I'm not afraid of no.
That's good tactics in more than one thing, as you very well know.
Yeah. Oh yeah.
Right. It's a game of statistics. You know exactly what I'm talking about.
I do. Yeah. So, you want to wrap it, or?
Let's see. Do we have any other question?
Generalities. So Didier's shorts US dollar ruble at around 81 is.
Keep in mind, US dollar holding short US dollar ruble pays a lot. So it's an actual carry trade. So you have that going for you. I mean, you can even take some pain on the way. I mean, but this is not a trade I would take with leverage. So let me be very clear with that. Okay, this is not a trade to take with leverage, at least not at the moment, because we don't have a reversal signal. This is a trade that you either take from a macro perspective and you start building on it and holding to it because you get very well compensated by holding, or you just wait for a reversal first. In any case, yeah, we'll talk more about the markets tomorrow, I think, Dale. Okay.
Okay, Steve. All right, everyone. Have a good Monday. We'll see you for Turnaround Tuesday tomorrow. And don't forget, if you haven't done it yet, how about this? If you enjoyed the summit and you're not a member and you want to thank us, subscribe. How's that?
Subscribe. You have a few days to take advantage of the offer, which is just a couple of times per year we offer it.
Yeah.
There's a second way you can really benefit.
Oh yeah, the Pepperstone account.
Open a Pepperstone account from the link from within ForexAnalytix sponsored. Once you fund your account, you get 2 months of ForexAnalytix for free, no strings attached whatsoever. Once you do 5 lots on your account, which within 2 months trading 5 lots is
nothing.
It's literally nothing. You get another 2 months.
It's a good deal.
Yeah.
All right, buddy. Remember, don't just count your pips, count your blessings. And we hope everyone felt blessed by the contributors that we had at our summit, because that's what they were trying to do is with their words.
We are going to try to have the recordings up by tomorrow night. There is a small chance that we might not be able to do that, and we might need to have them ready by Wednesday, but worst case scenario, Wednesday, you can watch all of them. The good thing about them is that the vast majority of them, if not all of them, were not really time sensitive. I mean, nobody came on the event to discuss what position they're gonna be opening Monday morning, and they intend to close by Monday end of the day.
Yeah, it was very macro. Yeah.
Yeah. Yes. No. There were people that actually spoke only about technicals, but still, not from a scalper standpoint, obviously.
Yeah, it was macro. Yeah.
Yeah. So bottom line, really watching whatever
they're
you
going
missed.
to have a lifespan. Some of them will be timeless.
Yeah, watching, whichever you missed, like Wednesday or Thursday, or even during the weekend, if you don't have the time, really, it's still fine. I mean, you still get what the speakers spoke about. So definitely do that. I definitely intend to rewatch a couple of them. Okay, Dale, thank you very much.
All right, buddy. All right, everyone. See you tomorrow. Thanks, Steve. Talk to you a little later, buddy.
Bye-bye, mate.
Bye.